What's going on, folks? My name is Chris, and in this video, I'm going to share with you a trade I took on January 20th, 2025. And this trade was on micro Bitcoin futures that trade on the CME Group exchange. And what I got to tell you about this trade is that it grew my small futures trading account by 31%, made over $1,000 just on this trade in about an hour. And I want to share with you various items around the trade. Obviously, I'm going to show you all the entries and exits. I'm going to show you how I got from being up about 600 bucks and then ending up over 1,000 because I continued to press on the gas pedal a little bit. I didn't just take my profit and run. I want to give you guys some takeaways from it. So I hope you enjoyed this content and let me know down below, and I'll see you in the video. Here we go. Okay, so I have Sierra chart open and these are my trade entries. So yeah, you can tell here that I'm connected to a live trading account. There's my clearing firm. I just have trading locked currently. So this would have been the entry on the day yesterday. This was the first partial. This was the second exit. And then you can see I continued scalping short, staying only short for the rest of the trading session until I finally decided just to cut my trade right around here after about 1:15 p.m. when I saw that the volatility was dropping. So various decision making that went into this day yesterday. I want to go over some of it right now. Let's also look at the trade statistics. This is the trade itself that took place yesterday, starting at 12:02 p.m. You can see after commissions, total profit on that trade right there. Flat to flat, max open profit was 1,400. Flat to flat, max open loss was only about 200. My risk on this trade, you're going to see it in the video, but it was about between $100 to $350. And obviously, I wasn't expecting this type of flash crash to occur. When I was entering the trade, I was just playing off of a reclaim of prior day high and the prior day 4 p.m. close. So if I go over to my charts on Sierra chart, I'm going to full screen my Bitcoin USDT perpetual Binance chart. But as you can see, I have charts for micro Bitcoin futures, Bitcoin perpetual on Binance, as well as Bitcoin on BitMEX. Sometimes I switch out this chart for MicroStrategy depending on how strong the correlation is. But also something I notice is that when the markets get a little crazy, sometimes the Binance data feed on Sierra chart does freeze, but I notice it has been more reliable. But you'll see that in my recording yesterday where the Binance data, it was slowing down a little bit. Here's where the trade took place, right on this pivot right here. Obviously hindsight's 2020, but I was basically entering on a reclaim of this 106,291 level right here. And I got an alert as we were reclaiming that level, and that's when I started shorting it right away. And I did not know or even consider that it could do this right after. I had no idea that it was going to do that. Once I saw how much it started moving, you're going to see how I moved my orders out of the way to basically let it do what it was doing, because what was happening wasn't normal, and I was clearly catching some sort of a fluke sell-off that was occurring, and I didn't know I was going to catch that. But either way, I think that the trade entry setup was a perfectly viable setup that I often take. So I'm going to go ahead and start the video recording. So yesterday was the inauguration of Donald Trump as new president of the United States. And one thing that I noticed was that the cryptocurrency markets were pumping for at least 3-4 days before this inauguration. So it was almost as if it was like a buy the rumor, sell the news type of event, where you had a lot of volatility on the upside in the crypto markets. You had all kinds of altcoins pumping to all-time highs. One thing that I was considering for the inauguration trading session is that at some point we could see a new all-time high in Bitcoin, but following that we could also see a lot of volatility, potentially an entire reclaim and potentially a new low as well. Because when you have significant events like this, macro events, that's the kind of stuff that can happen. We did get a new all-time high in Bitcoin, but I think it happened in the middle of the night on Monday night. And I woke up and that all-time high at 110,000 on Binance, at least, that was already in at that point, and we had sold off a bit. So looking at my recording, you can see that I was on X watching the inauguration live stream. I was just listening to it a little bit and watching the markets. Now, if you look at my chart, you can see that I had placed a line right there at 106,290 because that was a level that I was watching. I saw that Bitcoin had moved above that, and I was going to look at playing on a potential reclaim down to go short on it. Because generally speaking, I have more of a bearish bias when it comes to cryptocurrencies, at least in the last few weeks, because we've seen a lot of hype around them. And when everybody's looking one direction, I tend to look the other direction. Though I don't do it blindly and just short it blindly, I look for actual setups to short it that are, viable opportunities. And this was one of them. So I was doing some work on my system, and then I finally received an alert when Bitcoin started right there. You heard that beep? That was the alert that I got when Bitcoin perpetual futures moved down below 106,290. And what you're going to see me do here is not even hesitate. And I looked at it and I immediately just looked at where we were. And then I immediately just dropped in 2 orders for 2 lots each, a little bit higher than where the current price was. And I was also ready to modify them. I zoom in. You saw what I did there? I changed the vertical scaling of it because I wanted to see clearly what the bid offer spread was. And one thing that I noticed, this was around noon Eastern time, as opposed to 1 hour after this, the bid offer spread actually loosened up around 1 p.m. The bid offer spread was like 100 or 150 points wide on this micro contract as compared to where it was here. It was much tighter, which I found weird because we had more volatility and the bid offer spread was tighter. At least it looked tighter, just because there was more two-way volume going through. You could see that the bid offer spread is very volatile on this micro Bitcoin futures. I'm waiting at this point, and I actually do end up, so I ended up getting both fills right there. The market moves up. I reduce my vertical scaling. Then I go ahead and I move my stop losses up just above the highs just to get them out of the way because there could be, you know, some whipsaw action right there. And basically I see that I was filled on this, but I don't really like what it's doing. Now, one thing that I consider a lot of the time when I'm trading these types of volatile currencies is I consider something called an overshoot range. So for whatever level I may be using, so this might be the level that I'm looking for the reclaim on, I'm always considering an overshoot range above and below that level. And that overshoot range is categorized by a system that I use for measuring volatility, which is basically using an ATR calculation. It's basically a model that I developed that helps me to get a reasonable estimate of the volatility. Obviously, because volatility is always changing, it may not always be accurate and representing what the volatility is doing now. But I found a lot of the time, it gives me a reasonable number that I could use as an overshoot range. I use that overshoot range. In this case, you could see 57.6 ticks, but actually what that is 576 ticks or points in the market because my calculation decimal place is off on the thing. But anyways, I just do it. Anyways, I know that it's wrong, so I just do it myself. So I'm just sitting tight over here in the trade, looking at my charts. And I'm also seeing that this type of reclaim here is in play. So you have the prior day high up at 106.450 and 106.291, which is the 4 p.m. closing price of the prior day, which would have been Sunday at 4 p.m., which some of you might argue that it's not that important. I still believe that the time of day is important, even on weekends for cryptocurrencies. So the market starts coming back down below the level. I think it starts to accelerate down a little bit, which is obviously what I want to see. All right, so at this point, it starts accelerating a bit lower. And you can see how fast it accelerates right there. So it literally dropped almost 1,000 points in a few seconds. I managed to move away one of my orders, but my first order for 2 lots over here actually ended up getting filled. Look how fast it's dropping. And I wasn't quick enough to let go of the mouse. And it filled my 2 lot buy right there to cover. It bounces a little bit, but then you can see how fast it continued to sell off. And I just want to show you guys how fast this was because it was pretty crazy. So look how fast it's selling off at this point. It's literally crashing. So you guys can see how fast it's going down. Now keep in mind, at this point, I'm up about $500. And I ended the day up over 1,000. So what you're going to see is obviously me continuing to trade around this thing in a short position and basically leaning into some idea that I had that I see is clearly working. Now, one thing that did end up happening was I actually ended up taking a partial as it was crashing down into this 102 area. So you could see that I changed my profit taker quantity from 2 to 1. Keep in mind, I'm in a position short 2 here. The market is currently going down. I'm looking at my charts. I'm looking at contextual levels. And one level that is important is the low 102, so 102,000. So you can see right there on Binance, we traded it right there, 102,000 and 335. And if you look back at where my chart was, you could see that the price on the Bitcoin perpetual here is not the right price. But the levels that we're looking at here are 102, 300. And you can see there's a yellow line there, which is this line, which is what my supply-demand system categorizes as an important level on the daily time frame. A level where I would scale out or we could potentially see a bounce. I saw this. I saw the price we're at. We're below 102,000 on BitMEX. I dragged up my 1 lot order, and I actually ended up getting the fill at 102, 155, which I honestly think was some sort of a fluke. I was quick enough to go in there and put the order in. Believe it or not, that scale out right there was, I think, what generated the majority of the profit on the day. Because I was shorting it above 105,000, obviously getting paid for a 4,000 point profit there per contract. It's quite a lot. So I think that just that scale out was a $400 profit right there. Yep, so at this point of the day, I had already locked in about 600 and I had another 400 in open profit. I just continued to monitor it from this point, and we saw a considerable bounce after this. Something was interesting. I was watching how it was going to trade around the prior day midnight price levels, and those are going to be the purple dotted lines that you're going to see on my chart. So I'm just monitoring this. I still have my original short position over there. I moved my stop loss closer because I'm not going to be willing to accept if this market reverses completely on us. And you can see that we did reverse considerably back up, and we're right away back up at 105,800. Although I'm not panicking out of this just yet. In fact, I was letting the dust settle a little bit so I could potentially short more. And then what I started doing was drawing in overshoot ranges away from prior day midnight price. So what happens from here is very important. You're going to see a few trade entries. The first one was this one right here. So you can see I scalped it, sold it at 105,625, and then bought it back at 105,085. And then you're going to see me sell it again down here on the low tick of this bar, and then end up getting paid as it was flushing through this range over here. So what you're basically seeing me do here, guys, is continue to lean in to the trade setup that I'm in. So I have an average price somewhere up here about 106 and something. You're seeing me consider that I need to be continuing to short this, even if it's just going to be for a scalp or a few different scalps. I'm continuing to lean on the short side, continuing my short bias trade, and I'm basically playing with the market's money at this point, which is, in my opinion, a very powerful position to be in, especially if you started the day up nothing, you started the day flat, and now you're up about 6 bills, which is relative to the number of contracts and size that you're trading. But for me, being up 600 is actually high for the number of contracts that I tend to trade, which is like 1 to 4 at most. So since I'm playing with the market's money, I have the opportunity to continue to trade and potentially to lean in more to this trade that seems to be working. And this is something that's going to separate beginner traders from experienced traders, by the way, because most beginner traders, when they see a profit of that amount that they've never seen before, they're going to either right away cut it and proceed to self-sabotage themselves because something deep inside of them is not convinced that they actually deserve that money. But once you've seen so much crap in the markets, none of this phases you anymore. You're like, okay, I'm up some money. Let's play with the market's money and let's scale this and make a lot more. That's how I was seeing this. One thing is that when you're in a good position, the right decision most of the time is going to be to try to milk it for all it's worth. And how you do that is going to be relative to your trading skills and abilities. So I spent a few years learning how to scalp. So I'm in a position, but I can also scalp around the position to generate more cash flow if I need to. And this is something that you're going to continue to see me do right here. And also this video proves that one good trade and one trading day could be the day that makes your entire week or your entire month or even your entire year. All it takes is one trade and a bit of luck to back it up and leaning into days where you're up money on the day, because those are going to be the days where you could have those exponential up days. Just like if you guys watched my prior video where I talk about what's the difference between a winning trader and a losing trader, I talked about how I'm reversing the psychology of when traders constantly average down losses on days where the market's going against them. I'm flipping that on its head and instead saying when I'm in a winning position, I'm thinking on the opposite side of the trade and saying, who's on the opposite side of this averaging down? If there are traders that I think are averaging down, I'm going to keep adding to my position to leverage it to potentially get an exponential win. Just like some of those traders, when they're averaging down, they end up with exponential losses. And those are the days that they end up blowing out on. Trump inauguration day, we have a fluke sell-off. We're contemplating to cut the trade, but instead we're continuing to short it. At this point, the levels I'm paying attention to are as follows. 105,250 on the daily chart of Bitcoin perpetual Binance, as well as this prior day midnight price, which I can't quite see the level, but it was right below 105. It was probably about 105, actually, 105,000. So what you're going to see me do is basically take that level, which is about 105,200, and take my overshoot range and extend the upper end of that level. So 105 something, extended with my overshoot range, which is about 1,000 points. It says 109 ticks here, but it's actually 1,000 points because my indicator is not reading the right thing. It has the wrong decimal place. There's my level that I drew in. I did this all manually because I don't have my system set up so that I could put a level in and it automatically draws my overshoot range, although that would be cool. I'll probably end up doing that. So I draw in my overshoot of the midnight price level. And what I'm doing now is I'm looking for another short entry here, and I'm going to use that level as my new upper end of the trade, basically. So I'm going to scale out the contract that I short here if we start reclaiming that area, and I may even trim off the entire position. So that's the plan behind the risk reward on the trade, the risk at least. The reward is not certain, but you're going to see what I do in this case. Okay, so the market comes up, trades into the box. I have a sell order in up here above or closer to the upper edge of the overshoot range. I'm really not convinced as to what it's doing, and I see the way it was trading into the box, and then I realize, you know what, the risk reward on the trade is actually pretty acceptable here. So I ended up shorting a bit more there. Basically, the way it was going back and forth here for quite a while, it was like the second attempt of trying to go up, and it looked as though it was a bit heavy, at least on the taper as I'm reading the price action of it. And I get filled there. And I ended up just scalping a partial on this position right here. So you can see that I scalped it just towards the bottom end of this box. Order filled. Got filled for about a $50 to a $60 US profit right there, which is pretty good. So we're scaling up our profit on the day. I have about 780 USD profit locked in at this point, and the rest is in open profit. So we're still short. I lowered my average price down, but the bias on the trade still remains the same. So we see the market continue to move down. Now, this entry right here at 103,600 or 103,550, I would say it was slightly aggressive, but this entry right here was playing on a reclaim of the midnight price, of the prior day midnight price, 103 something. And I want to show my chart if I can. There we go. So right here, you can see 103,561. That's prior day midnight price, or actually 2 days ago midnight price from 18. And we're reclaiming down below that level. So I'm shorting it on the reclaim of that level. Now, one thing I want to note here is that you're seeing that I'm trading very aggressively. I'm entering on breaks of levels. And the reason why I'm continuing to do this, as opposed to selling on the offer when it goes up, is because my original trade entry had worked when I did that. So when I clearly see that when a market is reclaiming levels to the downside and they continue moving through them, it means that we're more of a momentum-based trading day. Momentum-based entries are working more. So since the market's confirming that to me, at least on the current day, I'm continuing to leverage that. So when the market breaks below 103,500, I decide to short another. I would say my entry price wasn't as good here. I think I entered a little bit more aggressively than the prior entries, because if I would have just put an offer in and tried to capture some of the volatility, that would have resulted in significant price improvement. I'm saying that judging on the fact that because the bid-ask spread is wide and we're seeing a lot of constant up and down motion around the spread. So even if you put your order somewhere like 100, 200 ticks away from, your range, you're probably going to get the fill. That's exactly what we saw. Actually, the market had a significant bounce back through the box, which I wasn't expecting, and ended up getting a pretty bad fill price. But after a few minutes, what you're going to see is that the price wasn't so bad because the market continued moving down. But that's not that important. What's important is that I believe that I could have resulted in price improvement on this entry, because you could see that once the market traded below 103,500, it came back through and it bounced. Just like it did on my original trade entry when I shorted up here. I shorted it on the break of 290, but we also saw a considerable bounce back up before it finally reclaimed it and went for the follow-through move. And this move was kind of like a mirror image of that one, except just a smaller version of it. So you can see we bounced all the way back up. We're trading 104,000. Somebody with a really tight stop would have gotten stopped out right there easily if they shorted it where I shorted it. And I was looking at different contextual symbols, and obviously what I want to see is it try to move back down and reclaim the level. And lucky enough, it starts kind of fading its way back down sooner than later, pops up another time or two, and then bids drop again, and we're back down sooner than later. If you guys are wondering about the risk on this, the risk is in the same place as where I defined it earlier, because I'm treating this more as a position trade. If I start seeing it reclaim that overshoot range above the midnight price level, that's pretty much where I'm going to be looking to get out. So we start seeing it try and reclaim the midnight price again. I have a profit taker down in the middle of this box area, which I thought was pretty reasonable because I don't know if it's going to go for a new low. The bottom end of this box was the low of the day that we made on that flash crash. I'm not going to bet that it's going to go for a brand new flash crash. I have a profit taker right before that, or at least in the center area of this box, because I don't know how far it's going to go. I like the Heiken Ashi bars because they do smooth out the price action. They take my attention away from a lot of that short-term noise. So I get filled on the partial right there, which again, locking in a profit of probably about $100 to $200. And I think that was the entry that put me up over $1,000 on the day. That was the exit, I mean. Now, one thing is we see a close below that box that was drawn, which signals a bearish signal. What it also signals for my system is that if we now see a reclaim of this box, it means that there's probably going to be some shorts offside that are going to have to cover, and that could result in the downward movement actually being done for the day. So that's something I was also considering at this point. Keep in mind, I'm only short one last contract here. This is when I would say the volatility starts to contract a little bit. We see a move back up, a reclaim back through the range. I actually ended up shorting one right as we come back in to this midnight price area. I'm kind of expecting it to kind of get caught up right around this area, and I wasn't really expecting it to go further than the high of this red box. You can see I even put my stop limit up there. So I did get filled right here, and what I noticed is that the market went right through my order. What it's signaling to me here, as the market went right through my order by quite a lot, is that my order wasn't as strategically placed as I thought, and the market is moving higher than I thought, which means the downward movement on the day is less likely to continue, at least in the next hour or two, which means that I'm going to start being less aggressive rather than more aggressive, because you can see that we have a significant reclaim up to 104,000. So I moved my stop loss out of the way because I don't know how far it's going to go. And we do see it get caught up a little bit around the top of this red box, which is good. So what I'm considering doing at this point is probably just looking to scale out as fast as I can. Maybe just scalp around it a little more and then scale out. I'm not going to be adding more size to this position because I think that the time to do that is long gone. Actually, so one thing I was looking at right here as it was coming down after trading the high end of that red box is I was looking to see if it could potentially reclaim 103,500 on the downside. And I saw it try to do it multiple times, but it was just getting stuck every time. Every time it would go down to 103,500, you can see that it's constantly getting stuck there. I saw it try multiple times. That's something that leaned me more towards scaling out and cutting this contract off. So you can see there it is, trying for 500. And then right away at that moment, you're going to see me drop my order right there, which is right in front of 103,500. And I ended up taking it off right there for close to a break even based on where I entered into the other scale in. Okay, and then after this, I stopped recording for a while, and I did end up continuing to record. Okay, so I started recording after I had shorted another contract right here. I actually ended up front running another break of the midnight price, which you can see I shorted another contract right here at 103,750. Again, playing with the market's money. Volatility is significantly contracting at this point, so I shorted one there, and I was looking to potentially get paid somewhere below that midnight price. But once I saw this, again, an attempt to break below the midnight price area and then fail it and come back up, that's something that signified to me that the market is pretty much not going to do what I'm expecting it to do at this point. So I think what I ended up doing was just watching it for another minute and then cutting it. And one thing I noticed at this point is that the spread was much larger than it was earlier in the day, about an hour before. You can see here we're bid at 103,600 and we're offered at almost 103,800. The spread was a lot larger and the volume was a lot lower than it was earlier. Yeah, so I'm thinking about cutting it at this point. I'm even saying it out loud. Put in my bid to get out, and I think what I ended up doing actually is just changing the quantity to 2 and getting out totally, or I may have done it with 2 separate orders. I'm not so sure. But I even saw how it was trading, and obviously there's a big risk. I mean, look at the spread. There's a big risk that if you want to get out right now, you're going to pay the offer to get out, which is a lot of money in this case. That's about $30 extra per contract if you pay the spread. So I'm waiting patiently on the bid for a snapback or a tick back or something. and I think I ended up getting it. So I changed my order quantity to 2. I actually moved my order a little bit higher as I saw that it wasn't getting filled. And I think I ended up getting it right there. You saw my 2 lot, there it was. And I went through on the tape right there as well. So that was the end of that trade, just getting out, as the volatility is contracting and calling it a day. And that was the end of that trade. Okay, guys. So I'm just going to make a couple of quick recap notes for the trade. I do think that this trade was somewhat of a fluke. This is not the type of trade that happens every single day. But because I was lucky enough to get involved in this, I was also smart enough to be able to leverage the fact that I was now playing with the market's money and leverage my trading skills to be able to take a couple entries after my initial entry that yielded profitable results too for this trading session. So basically, the one thing I wanted to share with you guys about this is how I managed to take about a $500 profit and turn it into about a $1,000 profit just because I'm playing with the market's money and I'm using my trading skills to kind of scale here. Being up on the day, a significant amount, is pretty much a superpower, especially if you do so early enough, because it gives you more bullets to play with. It gives you more flexibility in your trading. As long as you're focusing on preserving it as well and not just gambling it all away. But I also believe that because you're playing with the market's money, you could also be a little bit more loose with it, because even if you gave it back, it's not the end of the world as long as you don't give it all back. There's a lot of decision making that comes into play here. And I think that my decision making on this day was pretty spot on, and I'm going to continue to monitor the markets for opportunities similar to these, and maybe I'll get lucky again. But I honestly believe that the flash crash thing was a bit of a lucky fluke trade. Check out this video right here to learn about my prior day level study that I used to enter this trade. And then check out this playlist down here if you want to learn about how to use the interactive brokers trading software. Got a lot of videos on that. Thank you for watching. Take care.